We got Adam from Hungary. Really? Let's see where the fuck that is. Nah, I'm kidding. I have an idea. So Adam is from Hungary. We're gonna go find out where that is right now. By the way, I don't know much about the globe, just letting you guys know. I know as little as this right here. Like, I really don't know much about the world. So from Hungary, let's see where that is. Okay. So this is by kind of by London. Nice. Yeah, geography, it's a lot, bro. India, I know it's way over here. Oh, right here. I know it's way over here. Well, for the boy Adam, giving you guys a sneak peek, we might do like you know how I've been doing like the meet and greets or whatever, like in Miami and Colombia, all Latin America. So I might jump over here and we might go to London later this month, maybe next month. So do I know where Malta is? No idea. I think that's it's an island. Wow, really small island. Oh, it's better than Ibiza. I know Ibiza is by Spain. I think this is Ibiza. Yeah, there you go. That's Ibiza. Yeah, this is crazy. Well, we'll say the geographic class for later. All right, perfect. So how'd you guys like day 2? Did you guys watch the recording? Did it clarify some things? What'd you guys think? How was day 2? How was day 2? Did you come? I mean, you guys did your homework, right? Remember the recording, the homework was to only rewatch the recording. That was your only homework. Super eye-opening. Live plus 2 times, perfect. Watch it 3 more times, wrote down some notes. When I rewatched the recording, it cleared things up. Perfect, exactly. That's exactly what it's meant for. Like when you watch like when you first initially see it, you're supposed to be like, wow, that makes sense, right? Like it makes sense what he's saying, but I probably don't understand it. So when you watch the recording, it's like, wow, it makes sense. Now I get it. And then when you watch it again, it's like, wow, that makes sense. I get it. Now I understand it, so I can implement it. You know what I mean? Like there's like a process behind it. It's not instantly, I get it, understand it, I can implement it, right? It takes time for your brain to understand it because it's a lot. It really is a lot. Like I'm telling you, it's 5 years in one Zoom call. So I'm trying my best. But yeah, so we're gonna touch up on a little things first, and then we're gonna get to the final things of the strategy, which all of you guys I'm sure have been waiting for. And like I said at the beginning, it's gonna be so crazy that you guys are gonna trip out. Like it's so simple, you're gonna want to implement it as soon as we get off the Zoom call. You're gonna want to take a trade right as soon as the daily candlestick closes when there's no volume, just because how exciting it is, right? Because it's that simple. But I'm letting you know you can't. You got to do everything else before you actually enter the trade, right? So if you guys remember yesterday's call, correct? You guys remember yesterday how this was like this, and I basically explained, all right, your GBP, this is area of interest 1, area of interest 2. We will be waiting for a pullback to this area in order for us to sell. Type 1 if you guys remember, type 2 if not. Simple, right? If you guys, some of you guys don't remember, what about now? What about now? Remember how yesterday I asked you guys, was this bullish or bearish? And I told you guys the moment we body closed above this line, we are bullish. Well, this is a perfect example of how powerful these lines are. If you notice, the moment we body closed above this line, we created a higher high for what? To then create a higher low to then push to the upside. So this is where I personally myself can catch these counter trend trade moves because I know what the market is going to do, because I know what the structure is doing. Like this literally told you it was going to come to the area of interest because the 4 hours shifted to the upside. So if you guys notice on the daily time frame, it just looks like we're down here, but we need this pullback to head to the upside in order for this to continue selling with the daily. So what happened? The 4-hour was the first time frame to shift to show you that it was going to have that pullback to that area of interest. If that makes sense, type 1. If it doesn't, type 2. When you guys watch this recording, after I explain everything, you guys are going to trip out because this is very simple, right? So this happened exactly how we wanted it to, right? It had the shift. It's at the area of interest. If you notice, my alarm is not there anymore because my alarm was already hit. So now that we're at my area of interest, this is where I would wait for my strategy. This is where I would wait for my strategy to hit, right? So before we wait for the strategy to hit, we got to do our checklist, right? Because this is where we were yesterday. Where do we sell? And again, you guys watched yesterday's recording and we're literally like building this trade out live together. So this is where we were yesterday. Where do we sell? We sell at area of interest 1. So, well, we just got to area of interest 1. So let's take our trusty confluences over there. Let me just find the whole list. So I don't have to, is it this one? No. Where'd it go? Okay, so it's this right here. So if you guys notice, this is the confluences that we use from the daily down, right? So after we understand that we are bullish or bearish, we then have to understand we are at the area of interest. If you notice, we have the weekly bearish. So we will start doing this on the weekly time frame. This is where we will go to the weekly and we go on to the weekly. From the weekly time frame, what can we add here as a confluence, right? I don't know. So let's figure it out. Are we at a weekly, right now we are in a weekly, are we at a weekly area of interest? Type 1 if yes, type 2 if no. Come on, it's a 50-50. Are we at the weekly area of interest? 1 if yes, 2 if no. So if the answer is no, because this is a daily area of interest. We are on the weekly right now. We notice we are on the weekly time frame. So we're looking for weekly confluences, right? So for the weekly, we are not at a weekly area of interest because there's literally no weekly area of interest here. Are we touching the EMA? If we're looking to sell, we need to be under the EMA. So are we under the EMA to sell? Type 1 if yes, type 2 if no. This one's very easy. So obviously not. We are above it, so that's not good. Do we have a candlestick rejection? So let me actually do this right now. I have to send you guys the book. I have to send you guys the Trading Candlestick Bible book. I haven't sent it to you guys because I haven't wanted you guys to focus on the book yet because that book wasn't relevant. I want you guys to focus on it now. So I just sent it through the Telegram chat. That book is going to give you guys all of my entry signals. Everything is going to be in there. I'm sure many of you guys have already read the book. But for those of you that haven't, that's a little intel so you guys can read it, right? So as of right now, this is where we are. We currently don't have the weekly touching EMA. We are not at a weekly area of interest. Do we have a weekly candlestick rejection? This is not a weekly candlestick rejection. If we are at an area of interest, this would be a weekly candlestick rejection. It's the same candlestick rejections, right? This right now is not a candlestick rejection. If anything, it's not good because it's showing rejection. So if this is showing rejections, that means that next we can have a bullish candle. If that makes sense, type 1. If it doesn't, type 2. Perfect. So there's no candlestick rejection. Rejection from previous structure points. So before that, let's consider, does the daily area of interest 2, would that be the weekly area of interest also? Correct. So this would be the lower high. This would be the lower high, and then the lower low would be, as of right now, would be this right here. So this would be the weekly area of interest because 1, 2, 3 touches. So we can add this as weekly area of interest 1. So as of right now, does the weekly have a rejection from the previous structure point? Now I'm going to ask you, which one is the previous structure point? Is the previous structure point 1? Is the previous structure point 2? Or is the previous structure point 3? Which one is the previous structure point? Okay. So I'd say a 60% of you guys have it, right? So I don't know why you guys are saying 1, right? This is not a previous structure. I mean, I'm sorry. I don't know why you guys are saying 3, because this is not a previous structure point, right? So just to make it clear, I'm just going to do this right here. If you guys ever are in doubt, just mark off some markets, right? So we're just going to get this market and put it up here. So this is literally this right here, right? So I asked you guys, was this previous structure point 1? Was this previous structure point 2? Or was this previous structure point here, right? So now I'm going to ask you guys again, which one do you guys think is the previous structure point? 1, 2, or 3? 1, 2, or 3? Exactly. It is point 2. So for those of you guys that answered 1 and 3 before, you guys understand why, correct? You guys understand how this is not a structure point. Obviously, this is a structure point, but it is not the previous structure point. This is the previous structure point. I can see how you guys can get confused with this one, but if I were to simply just do this, flip the chart, which one looks more clear like the previous structure point, right? Obviously, this one. This is the previous structure point. You guys see it? It's a lot easier to see it on a buy versus a sell. Basically, you guys were saying that this was the previous structure point and not this one. So this is obviously the previous structure point. It's exactly for the example that I explained yesterday. This could be an area of interest. This can have a pullback here to go to the upside, but that is not the previous structure point. This is the previous structure point right here. If it makes sense, type 1. If it doesn't, type 2. You guys are clear with this, right? This makes perfect sense. Like I told you guys, all of you guys understood this yesterday. All of you guys said 1. But now when I bring it back, some of you guys get it, some of you guys don't. So for those of you that don't get it, the only reason why you don't get it is because you haven't seen it again. When you see it again and again and again and again and again and again and again, you're gonna get it. So that's why I'm saying the recordings is the secret to the success in this, honestly. All right, so let's just go back right here. So we understand where this is. So do we have rejection from a previous structure point currently? Type 1 if yes, type 2 if no. Exactly. No. This is the previous structure point right here, and we are not quite there. So rejection from previous structure point doesn't count. And then around psychological level, I mean, it doesn't count right now for the weekly because we don't have a weekly area of interest. So for the weekly time frame, we have 0 confluences to add to the trade. So what do we do now? All we do now is we move on to the daily time frame. Literally, all we're going to do is just go down to the daily and do the same thing. So we go down to the daily, we use the same exact box. So if you notice on the daily time frame, we are currently at a daily area of interest. So if you notice here, daily area of interest. Type 1 if you guys agree, type 2 if you guys don't. You guys, okay, perfect. You guys got to listen to what I'm saying, right? So we are at a daily area of interest. So this one is a check. Are we touching our EMA? Type 1 if yes, type 2 if no. Perfect, easy money. Do we have a candlestick rejection? Type 1 if yes, type 2 if no. My bad, 1 second, guys. All right, so I'm back. So do we have a candlestick rejection? Currently, as of right now, we do not. This is not a candlestick rejection. When you are at an area of interest, you want to have this right here. Bullish engulfing, morning star formation. Obviously, if you don't know what that is what the book is for that I just sent you guys. You want to have this right here, bullish engulfing, bullish engulfing. You want to have rejection candlesticks. You want to have dojis. And as of right now, yeah, exactly what you said. Exactly. The candlestick hasn't closed 35 minutes. We all know in 35 minutes, this shit could do whatever it wants. This shit can close like this for all we know. This can close way above this zone and that's it. You know, it's broke through the zone. Half of these things are gone, right? So until it doesn't close and doesn't give us a rejection, we can't put it that there's a candlestick rejection. It's just that simple, right? There's just no candlestick rejection. So as of right now, there is no candlestick rejection within this trade. So there's no EMA, there is no candlestick rejection. Do we have rejection points from previous structure point? Type 1 if yes, type 2 if no. It's easy. It's easy. It's easy. It's very, very, very easy. All right. So I see 100% of you guys got the answer correct. So I want to see if you guys know where the previous structure point is. Is it point 1? Is it point 2? Or is it point 3? 1, 2, or 3? Okay, 100% of you guys, correct. So the correct answer is point 3. You guys are seeing how all you got to do is just see it one more time. You guys saw the last example, you guys got it wrong. Now you got it right. Due to what? Just one time that we repeated it. So like, this is what I'm telling you. The real secret to how to trade, to the skill set, to really get it is repetition. You got to see it again and again and again and again. You're going to hear me say this quite often, but it's just simply the truth, right? There's no like, you're not going to crack it from like one day to another. It takes time for even to you learn how to understand it. So you do it, right? So as I'm right now, no rejection from previous structure point. And do we have a round psychological level? I don't know. Throw the line in the middle, double click it, and then we look for every 500. So 500 is at the top. If you were to round it off at the bottom, or what would it be? 600? Wait, 500, right? So if you notice, oh, the other round 100 would be 700. So it would be way down here. So as of right now, a round psychological level for this trade does not apply. So canceled out. If that makes sense, type 1. If it doesn't, type 2. Bet. So all we currently have for this trade is we are at daily area of interest. And then technically the 4-hour is bullish. You guys see why we can't jump at the trade right away? Like, you guys are seeing why you got to build a trading plan. Like, it's not that easy. It really isn't that easy. From this trade, what we can get is for sure a candlestick rejection. We can for sure get a candlestick rejection from right here, which would be fire, right? This would add a 10% to the trade. But what would be a little more ideal is if this move makes it up a little bit higher, because if it makes it up to this point, now we have a weekly area of interest. We have a daily area of interest, rejection from previous structure point. By the time we come up to this level, then the EMA has then dropped. We probably have a round psychological level in there. You guys are seeing how many things I'm just adding by waiting for price to get to another zone. Like, you guys are seeing how simple it is. So this is what I mean by placing these zones. Once you place these zones, you just wait for price to get there. And then I think this is a question that I got asked yesterday. Would you rather have area of interest 1 or 2 or 3? I just rather have whichever one makes the most sense, whichever one gives me the most of these. And as of right now, this one isn't giving me any of that. Does that make sense? Type 1 if yes, type 2 if no. Those two area of interest aligned will count as 20%. Yes. More, yes, the goal is to get more percentage. All right, perfect. Simple, right? Easy. Couldn't get any easier. All right, cool. What else we got? All right, so if you guys noticed yesterday, like I'm telling you, this is why I like doing these live classes. If you guys go watch yesterday's recording, how was this yesterday? This was literally like this yesterday. And I explained to you guys, all right, we need price to pull back to area of interest 1, area of interest 2, or area of interest 3 before me even being interested in the trade. What a coincidence that the pullback has stopped right at the area of interest. Like this, do you think that's a coincidence? Like this could have had a pullback and it could have stopped anywhere. It could have stopped up here, could have stopped here, it could have kept going. Where did it stop? Right at my area of interest. Why? Because it's daily area of interest, weekly area of interest, and a round psychological level. So this zone right here is gonna stop price immediately. It's gonna put a halt to it right away. You guys are seeing how that works? You guys are seeing how it's not like fucking a coincidence? Type 1 if yes, type 2 if no. Does the weekly head and shoulder? Yes, it does, Sebastian. Yes. But I mean, I don't want to get too into depth into that right now. I want to like cover the other things. So we're gonna do the same thing we just did, but right here. Hold on, let me just take this off. All right, all I need is this. All right, bet. All right, so this right here. Bullish or bearish? Let's see. Let's see. Bullish or bearish? Take your time. Take your time. We just pulled up. It's a Sunday. We're analyzing the markets. The first thing we got to do. Type 1 for bullish, type 2 for bearish. All right. 80% of you guys are making a mistake. It's okay. Actually, not really, because we're past that. But I can see why you guys are going to make it, because you guys don't have the tool right in front of you. So we're going to do it together. We're going to figure it out. Are we bullish or are we bearish? So let's see. I did all of this the first day. Actually, let's bring this over here. All right. So you guys already know what this is. You guys already know what this is. The moment we break under, this goes here. Then this goes here. The moment we break above, then this goes here. That stays there. The moment we body close above, that goes there. And then this goes here. The moment we break under, this goes here. And then boom. You guys are seeing it, right? Does it make sense? You guys are seeing how powerful these freaking lines are. So if you notice, if I were to put this line at that body right there, did not body candlestick close under. Crazy. I'm telling you, it's crazy. It's mind-blowing. It's insane. If we go to the structure, even better, you could just put it right there. It didn't close under. So I can see why you guys get confused more than normal. It's very, very understandable, because if this were to be the lower low and this does this, obviously we are bullish. But just got to keep in mind that you got to put the lines. So we use that as a lesson. So we got weekly bearish, not narish, bearish. We go down to the daily time frame, right? Daily time frame. Are we bullish or bearish? This one should be simple. Type 1 for bullish, type 2 for bearish. This one's easy, right? Perfect. We are all wow. I see what you guys, wow. Using my lines, huh? Cheating. You guys are cheating. No, but it's okay. Bullish. All right. And then the 4 hour, are we bullish or are we bearish? Bullish or bearish? 1 for bullish, 2 for bearish. Correct. 100% of you guys. So then the 4 hour is bearish. Currently, we have this time frame bearish. We have this time frame bearish, and then we have this time frame bullish. We do not have 2 time frames in sync. Next. That's it. You guys see how simple that is, right? That's it. That's it. We don't need this. Gone. Simple. We don't need that stress. There should be no question on, well, what do we do what do we do now in that case? What we just did. Exactly what we just did, that is what we do. It is that simple. We don't care for those type of trades. We care for these. Because imagine this. Imagine this right here, you just tried to build out with 2 time frames in sync. It only gave you 30% because this is a 20, right? 30%. Imagine if this right here doesn't have the time frames in sync. What are you doing? If let's say you're going to buy, you only have 1 time frames in sync. So you're already starting off with a 10%. That's it. Like, you could build it out as much as you can. You'll probably get 30% out of it. You know what I mean? So this is crucial to how you guys approach the markets and crucial to how you guys get to do it, because if not, it's just not going to end well. So the power is to just get out of that way. That's it. Even if it looks good, oh, it's at area of interest 1, doesn't matter. No 2 time frame sync, don't take the trade. Type 1 if you guys get it, type 2 if you guys don't. Perfect. All right, cool. So now we are ready to move on to the next point. All right, where was I doing it on? Was I doing it here? All right, perfect. So after we understand that we are bullish or bearish, after understanding that we have area of interest, whether we're touching EMA, whether we're using any of these confluences that we have been talking about this whole time, after we understand the order, all of this stuff, once you understand all of this stuff, then comes the next step, which is the actual strategy, which is my entry signal and everything, right? And we'll leave that for tomorrow's call. No, I'm kidding, guys. I'm kidding. I'm kidding, bro. I'm kidding. I'm telling you guys, it's gonna be so simple, right? So what I look for in my trade is a shift of structure, because everything we've been doing right now has been on the weekly, daily, and 4-hour. I don't know if you guys have noticed. We've only been on these 3 time frames this whole entire time. Now we're officially going to enter the trade. So now is where we go down to the lower time frame. So this, once we're at my area of interest, we have all this stuff. This is where I look for a shift of structure on the 2-hour, 1 hour, 30-minute, or 15-minute, whichever one looks cleaner. And I need a bearish or bullish engulfing on whichever time frame looks cleaner. That is literally it. Now, this might seem very simple, but it takes some very detailed explanation for you guys to fully understand, right? I'm going to give you guys a second to understand what I'm saying here, right? So let me break it down. We understand, let me actually bring this over here, right? So we already understand that this time frame right here, hold on, let me just do this. All right, so we already understand that this time frame right here is bullish, and we're going to say that this is the daily, for example. And then we would mark this off as our area of interest. If you guys agree, type 1. If you guys don't, type 2. All right, so this is daily. So this is 1 daily area of interest 1, 2 previous structure points, 3 daily, got round, psych, level, so on and so forth, right? Let me just bring this up here so it makes more sense exactly what I'm talking about. So let's say right now, this trade at this zone, once we are here, we got these 3 confluences, right? We got this pullback at this level. And as of right now, we got these 3 confluences with which would pretty much be one previous structure point, all right, and then there. So we would have these three confluences, right? 1, 2, and then 3. If that makes sense, type 1. If it doesn't, type 2. Simple, right? Okay. So now that we understand that, now we got to apply my actual strategy, my actual entry signal, entry confirmation, entry, whatever, right? So this is where I would go down to 2 hour, 1 hour, 30 minutes, and then 15 minutes, whichever one looks cleaner. I don't have a preferred one. Obviously, the higher the time frame, the better. Okay, right? If you guys understand this, type 1. If you guys don't, type 2. Just like the message that I'm trying to explain, right? So this is what the daily looks like currently. And then this is what this same exact move looks like on the 2 hour, 1 hour, 30 minute, 15 minute, so on and so forth, right? So just give me a second. Let me just draw out my structure. So if you guys notice, this is the exact same trade, the exact same area of interest, the exact same everything. This is just how it looks like on the 1 hour, 2 hour, 15 minutes, so on. If that makes sense, type 1. If it doesn't, type 2. Okay, perfect. So you guys understand that this has gone from bullish to bearish to bullish to then bearish, correct? Type 1 if yes, type 2 if no. Okay, so on this time frame, are we bullish or are we bearish? Type 1 for bullish, type 2 for bearish. Okay, so then this would be our higher high. And then this would be our higher low. Right? So we are currently bullish. On this time frame, are we bullish or are we bearish? Type 1 for bullish, type 2 for bearish. Okay, so we all agree that this time frame is bearish. So this would be the lower high. This would be the lower low. All we need is to have a shift of structure at area of interest. That is it. So what is the shift of structure? We would need this to then shift to the upside, making this time frame now bullish. Because if you are buying, you need to be having a higher high and higher low. If you are going to be selling, you need to be having a lower low and lower high. That is it. If you guys want to see the perfect example, it's what just happened on Euro GBP. We had the shift of structure, just not at the area of interest, the shift of structure, and then we headed to the upside. The exact same thing we want to happen at the area of interest. If with this simple instruction, does it make sense? Type 1 if yes, type 2 if no. It is very, 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 very simple. That's what I asked. Yeah, exactly. It's just a matter of waiting. So what we do is this pullback right here on the daily, it just looks like one move, right? It just looks like a couple candlesticks. But on the lower time frames, this pullback, in order for this daily time frame to have a pullback, this lower time frame has to go bearish in order for it to get to this zone right here. So all we have to do is once it gets to this zone, we just have to wait for it to break the previous lower high, because the moment we break the previous lower high, we have now then shifted bullish. And this is where now it's going to start creating higher highs and higher lows to the upside. So we're getting in, this is the first time frame to shift before the daily continue going to the upside. So this is where I would look for my bullish engulfing. This is where I would look for everything. This is sexy for day traders. Yes, this is why I've been day trading lately. It's so simple. If that makes sense, type 1. If it doesn't, type 2. If you have any questions, this is the moment to ask it. It really should not be complicated at all. Like, it's so easy. Please show us on the real charts. All right, I'll show you guys on USD JPY. I'll actually show you guys on a trade that I took, for example, right? Let's just suppose this trade right here. I'm going to box it off, right? Let's say right here, this is the daily time frame. We have a retest of this area of interest right here. We have 1, 2, 3, 4 touches, right? We pull up. Once we are in here, this is where I'm waiting for the shift of structure. This right now on the 1 hour, 2 hour, 30 minute, 15 minute is bearish to get to here. This is where I will wait for the shift to go to the upside. If that makes sense, type 1. If it doesn't, type 2. All right, so this is where I will go down to the 1 hour. So let's go find it over here. So this is where I will go down to the 1 hour, 30 minute, 15 minutes. So the 1 hour doesn't look clean because if you noticed, it is bullish heading to the upside. Then it had to go temporarily bearish to have the pullback to the downside. So on the 1 hour, this is the lower high. You would need for this one to break to take the trade, right? So if we were to go down to the 30 minute, does it look clean on the 30 minute? If we go to the 15 minute, does it look clean on the 15 minutes? No, all the lower highs would be the same exact point. So this trade, I wouldn't have taken, right? The USD JPY that I took was this one. Let me show you guys. Okay, I think it was this one. Let me see. Dun, dun, dun. All right, perfect. This is the exact trade example that I'm talking about. All right, so if you notice this trade right here, right? We are at a lower high, right? We are retesting area of interest, EMA, daily candlestick, whatever. This is where we'll go down to the lower time frame in here to wait for the shift of structure on the 2 hour, 1 hour, 30 minute, or 15 minute. So this is where on the 1 hour, 2 hour, 30 minute, 15 minute, we are going bullish. We need to wait for it to go bearish because it's the first time frame to show us the shift before we continue the leg to the downside. If you guys understand, type 1. If you guys don't, type 2. All right, so this is where we'll go down to, let's say, the 30 minute, 1 hour. I just use it as whatever. So if you notice, this shifted to the upside so it can have the pullback, started creating higher highs and higher lows. Let's say you count that. The moment we body closed under right here, this is where the time frame shift. This body candlestick closed under. This went bullish to have the pullback to the area of interest, and then we closed under the structure point, making it bearish. Does that make sense? Like, this is literally your trade right here. I actually got into this trade right here. I was watching this on YouTube, but couldn't put it together. Yeah, I literally show this on YouTube, like exactly to the T. But nobody understands because I don't teach like all the before stuff, which is like the simple stuff, but the complicated stuff. So you do this on the 15-minute candle. I do this on the 15-minute, 1 hour, 2 hour, wherever it looks the cleanest, right? So as of right now, this shifted on the 1 hour. This was the high. This is the high that I had to break. It shifted it. That's how it looks on the 1 hour. On the 2 hour, it's the same exact point. Well, I mean, this was still the bearish one, but it broke the structure. The point is that this is the area of interest right here. Price, as it's going down, it is selling. And then in order for price to come back here, it can't just pop up and then go down, right? Price, in order to come there, it has to then shift bullish. So once price gets here, all you have to do is wait for it to shift bearish, and it's going to be the first time frame to start creating the lower lows and the lower highs. That's literally it. That's why I told you, if you guys understand day one, You're going to understand everything because everything is structure. And then obviously, like I could play this out and it just has like the full lower high, lower low, lower high, lower low, lower high, lower low. So look, we're going to keep it going, right? We're going to keep it going. I think it keeps going to like where we are right now, I think. Yeah. This is where it just shifted right now, bullish. So now this right now is going to do two things. Since it shifted to the upside, this is now going to create a higher low to then either make it to this area of interest and then here it shifts, or this can then have the shift to the downside. This is dope. Just have to be patient. Yeah, it just takes patience. That's literally all it is, which is good because you're taking the best probability trade. After price shifted on the entry, retest on immediately. Yeah, you just want to enter as soon as it shifts, you want to enter on the engulfing. So I don't know. I'm just using these trades here as an example. Let me see. So let me see this one. Perfect example right here, right? So if you guys notice, we are obviously bullish on this trade, correct? So we are at our area of interest. We are touching EMA, so on and so forth, right? You guys understand everything to that point, correct? Type 1 if yes, type 2 if no. So now this is where I would come in and I would apply the strategy. What is the strategy? Let's put it all together right now. Where'd it go? Here it is. Is it here? I gotta clean this up. It is right here, right? All right, so CAD JPY. We understand we are here, correct? So this is the strategy from the point on. So currently right now, we are at area of interest, so that would count. We are touching the EMA. As of right now, no candlestick rejection, rejection from previous structure point. We do not have a rejection from previous structure point. And do we have a round psychological level? Let's figure it out. We put the zone every 500, the bottom of the zone or the top of the zone. So we have 9,900 as round psychological level. So this is going to be at the top of the zone. Then we would do this on the daily, then we would go down to the 4 hour, so on, right? But then comes the part of the shift of structure. But before I get into that, you guys obviously understand this, correct? What I just did. Type 1 if yes, type 2 if no. Obviously did it fast, but it's pretty straightforward. Like we just, like again, it's just repetitive. It's just the same thing every single time, right? So now this is where we would go down to the lower time frame and we would look for the shift of structure on the 2 hour, 1 hour, 30 minute, 50 minute. Freaking bug. All right. Oh, all right. So this is where we'll go down to the 30 minute. And now that we are here on the 30 minutes, what are we currently on the 30 minute? Are we bullish or are we bearish? Bullish or bearish? Okay, exactly. We are currently bearish. So if we are bearish, I personally would count this as the lower high. And then I would count this as the lower low, right? In order for us to take this trade, we have to shift bullish to start heading to the upside. If you guys agree, type 1. If you guys don't, type 2. All right, so we'll keep it going. All right, so this just keeps moving down. I wouldn't count this as the lower high. It's not that clean of an elbow. We keep it going, keep it going. All right, so we broke under the lower low here, correct? Do you guys agree? Type 1 if yes, type 2 if no. All right, so this is now the new lower low. So where would the lower high go? Would it go to point 1, 2, or 3? 1, 2, or 3? Correct. 100% of you guys got it. So the moment we shift above, we are now bullish. This is where we will enter the trade. Correct. So we keep it going. As of right now, have we shifted? Type 1 if yes, type 2 if no. No, we have not shifted yet. You guys are seeing. All right, now we have shifted. So now this 30-minute time frame is bullish. Now this is a higher high, and then this is a higher low. And you can verify, you can go to the 1 hour. If you notice, the same thing happened on the 1 hour. This was the lower high, this was the lower low. It just shifted bullish. You guys are seeing that, right? It looks the same on the 1 hour. It looks exactly the same on the 2 hour. On the 15-minute, it looks exactly the same, right? So that's why I say whichever one looks cleaner. There's never a right one because they all kind of always look the same. It's just which one looks the cleanest. For this example, the 1 hour would probably be the cleanest one. This looks like a clean lower high, clean break under, clean break above. So now all you got to do is wait for this little pullback. If it does, if you want it, the most ideal is to wait for a little pullback. And then here you wait for the bullish engulfing. So this is where I'll do the same thing. 30-minute, 1 hour, whatever. And then you wait for a bullish engulfing, which is that right there. That boy right there. That is our bullish engulfing morning star. And then you take this motherfucker and then you just set and forget. That's it. Simple. You guys are seeing how the 30-minute time frame was the first time frame, or the 1 hour, whatever, to shift, to show us that we are rejecting this zone right here. You guys are seeing how crazy that is, right? Like, it's so simple, but it is so effective. It is literally the first time frame showing you that it is going to reject. And if you notice here, we entered off of the 1 hour bullish engulfing. We entered off of the 30-minute bullish engulfing. Like, it's just whichever one looks cleaner. So when we were to go add it to our confluence list, so that's what we're going to add here, 6 and then 7. So this is going to be for entry signal. We're going to make this 6. It's going to be shift of structure is 10%. And then entry signal 7. Entry signal is going to be another 10%. It is the most important part. Simple. Because you're seeing how crazy that is, right? Like, it's literally insane. I'm not making any of this stuff up. So now, I'm sure I'm going to get asked now, where's my take profit? Well, where are you buying from? You're buying from a daily area of interest. You just said a daily take profit. That's it. Like, how are you going to buy in the 30-minute instead of 30-minute take profit? The point of us going down to the lower time frame is so we get those sharp entries, so we could get a nice risk to reward. And then let's say this would be my take profit, would be the previous structure, and then that's it. I promise you guys, it really is that simple. This trade right here would have probably missed it by like a pip, but a 1 to 5 almost is solid. I would have probably still be in this trade because it didn't hit my take profit. You don't use the 1 minute or 15-minute for entries. That's the first thing that I said. I only use these time frames. There's no need to go like any lower. You don't need to get any more precise than the 15-30-minute, like at all. How do you select your stop loss? So the stop loss, well, we'll get to that now, but I want you guys, before we get into that, you guys understand it? Is it simple? Is it too easy? What do you guys think before I get on to the next step? Saucy, simple. What David hits the gym. Definitely the last piece I was missing. Genius, bro. This just made it so simple. I mean, and I'm telling you right now, I could go on for days with these examples, bro. Like, for days. I'm literally just looking for anything random, right? Let's just say right here, right? I can almost guarantee you this on the lower time frame had a shift of structure. I don't know. I'm just going through some random charts, right? If you notice right here, look at your shift of structure. Let's say you were to call this your lower high, or you were to call this your lower high, you get the shift. We'll go back to the daily. We just got to find daily points. Literally anywhere. Let's suppose right here. right? Because this is a daily zone. So we'll just find that other circle. So right here, no shift, no trade. The moment we body close above, we shift the 30-minute structure, gone. Like it's all you have to do is just wait for the shift of structure at the area of interest. I can see the chart much cleaner. Exactly. So for example, right now, let's say Euro GBP, right? Euro GBP, we are currently at the area of interest, right? This is where we go down to the 2 hour, 1 hour, 30-minute, and we have to wait for the shift of structure. So where's the higher low on this trade? The higher low right now is currently right here. This is the higher low. This is the higher low, and then this is the higher high. In order for us to take this trade, we would have to wait for the shift of structure. The shift of structure would be this. Would have to be us to then break this to then go to the downside. So what do you want to happen in this trade? You want this trade to create a higher high, because then if it creates a higher high, that means that the new higher low is a lot closer. So it gives you a lot more breathing room to take the trade when it actually happens. You guys are seeing that, right? Like I'm not taking the trade before it shifts the structure at all. That's why I told you guys, like it just wherever it makes the most sense. And as of right now, for us to take this trade, that happens. So that's why it's so crucial, the candlestick body closures. Because if this gets a candlestick that the body closes right above it, that's it. That's a new higher high. And then this is the new higher low. If that's the new higher low, all we got to do is then just shift this right here. That's literally it. You guys just seeing how it's something so simple and so precise. All you have to do is just wait. Like literally, like right here, this can literally do, this right here can literally do exactly what it did over here. Just create another quick little higher high so it shifts it quick and then we're in. That's it. That's literally it. That is literally it. And I'm telling you guys right now, this took me probably 2 weeks to explain. The fact that I'm getting this over on one call is mind blowing to me. And the fact that I'm even making it like understandable is crazy. I've been taking all my entries wrong. Yes, that is what 100% of you guys do all the time. You guys are taking the entries way too early. You're not taking it before the shift of structure. It's funny how easy you make it. It's so simple. Like I told you guys at the beginning, it's going to be so easy. And I just love going like on examples like forever, right? I don't know. Like, I don't know. I'm just gonna like click a random pair, right? This one, whatever. AUD USD. What a terrible pair to pick. No, I'm kidding. All right, so we can literally go through anything. It doesn't matter. So let's say, for example, I don't know. Let's just say I'm just trying to find like an area of interest, right? Let's just suppose like this right here, right? Let's just say this is an area of interest, right? We had a lower low, lower high pullback. This is where we're going to look for a shift, right? We got EMA, we got all that stuff. So we got to find the circle right here. So if you notice what happened, the shift, this was creating a higher high, higher low, higher high, higher low. We then shifted. So I would have taken this trade right here and I would have probably not gotten stopped out. I'm going to explain stop losses and all that stuff now. But let's suppose that you did whatever, you get stopped out and then you wait for the shift again. The shift happens. Obviously, this is a huge candlestick, so there's nothing you could have done there. But if this would have been a normal bearish candlestick that closed under here, then this would have been your new trade. Does that make sense? You guys are seeing how it's just the shift of structure at the area of interest, right? We can keep going. Let's go to AJ. What was the AUD JPY trade that I took? I mean, this is the same example right here. Let's say this example right here, right before the push. You go down to the lower time frames, and here it is. If you notice, you see how it is bearish. Lower low, lower high, lower low, lower high. We then shift, higher low, entry signal, and then it is gone. That's it. It's literally just the shift at the area of interest. That's really all it is. Are you putting your stop loss above or below the higher? Exactly, bro. You said it. So let's say this is the higher low. This is the shift of time frame. So now this is, let's actually go back to the example that we did earlier. So this is where we were, this is where we shifted, right? So this is now the new higher high, and this is now the new higher low. When I take my trade, my stop loss needs to be under the higher low, right? Don't mind the pips, none of that matters. What matters is the high, like the higher low on your stop loss. It needs to be under the higher low from 5 to 10 pips. Why? Because if this trade hits your stop loss, that means we just created a new lower low. So that means that it should keep going to the downside. Because if you put your stop loss anywhere inside this higher low, anywhere inside this right here, this can just still be creating a higher low pullback to head to the upside. That's why I told you guys at the beginning, if you get the first day, you're going to understand everything, because anything inside this can still be bullish. Anything inside here, it is still bullish. So it can still be creating a pullback if you put your stop loss here, stop you out before you go. So that's where everybody says, oh, I got stop hunted. It's like, no, dude, you just didn't put your stop loss under the zone, bro. Like, people find excuses very fast, right? But this is where your proper stop loss is supposed to be, because if it gets hit, then you are completely wrong. This trade is now bearish. This is now a lower low, and then this is now the lower high. Type 1 if that makes sense, type 2 if it doesn't. You're just seeing how crazy it is. I'm telling you, it's literally insane. For example, here, if we would have taken this trade, take it here, and then the stops are above this zone right here. So if this is the 26 pips, we add from 5 to 10 pips. So we have something like this. I'm telling you, I think I took this trade, I swear. I have to have taken this trade. I can literally check through my, you know what, I'm going to do it. I'm going to check. What is this? May 23rd. May. Let me see. All right, we gotta give this time to load. Was it on this account? May 3rd. Looking at the year. May 3rd. No, it's not popping up. Whatever. The point is, I am 1000% sure I took it. Okay. Do you guys have any questions so far regarding the entry signal of this? Thoughts on double bottoms, double tops? I'd rather have it shift the structure versus the double bottom, double top. So you don't really use the 4 hour. Technically, yes, just to have an added time frame, and we use it to add confluences. So yes, we do use the 4 hour. We use the 4 hour to add a time frame in sync, and we use the 4 hour to add one of these 3 candlesticks. I mean, one of these 3 confluences. So it can add a total of a 25% to your trade. So actually 35, because if you add these 3, that's 25 plus 10 from here. The 4 hour adds a 35% to your grade, to your trade. So yes. Yes, we take the trade after the engulfing. Yes. How do you calculate pips? Honestly, by my risk to reward tool. I just calculate. So right here it says 25. I just add 5. So that'll be 30. And then don't worry, guys, I'm not gonna just send this to you guys like throughout. Usually what I do for like the 3-day boot camps, like I'm gonna send you guys trades. Like whenever I see like a fire trade, I'm gonna send it to you guys, and I'm just gonna be like, grade the trade. Tell me, what do you think? Is it an A, B, C? Or I'll grade it for you guys so you guys see it and fully understand it. I know like the continuing mentorship helps a lot. Minimum percentage to take on a trade. I usually always target a minimum of a 1 to 2.5. This is my minimum my minimum risk to reward. So I'm risking $1 to make $2.50 back. I feel like 1 to 2 is too little. And then I feel like 1 to 3 might be a stretch. So right smack in the middle, 1 to 2.5. Obviously, we get more fire, you know, but I always target minimum. Like I won't take a trade if I won't get this. Like let me actually say something, right? I feel like I haven't said this. I can have a trade that can have everything. It can have the world. Let me find it. I can have a trade that can have all of this. Can have all of the confluences in the world. I'm talking about entry signal, engulfing, everything. It can give me an 80%. And if the trade doesn't give me a positive risk to reward, I'm not taking the trade. Like if the trade is like this, I'm not taking it. Because it's the risk to reward isn't there. You get what I mean? Like it's just simply not there. And that is something that is so powerful and so overlooked that it's not going to, like, it's not going to make or break your, I mean, I'm sorry, it'll make or break your trading if you can build off a whole entire trade and then still not take it because it's not a positive risk to reward. And you got to be realistic. You can't say, okay, you know what? I'm just going to make the take profit bigger. But it's like, all right, hold up. Now this take profit has nothing to do with like a daily structure point. Like you're not putting it based off of anything. And you can't make your stop loss tighter because now you're risking of getting wicked out. So you just have to be real to yourself. You got to be real to your strategy. You got to be real to everything, real to literally every single thing. So yes, I have had trades where everything's there and I don't have a 1 to 2.5. Maybe I'll stretch it if it's a 1 to 2, but I won't take it. I just don't care because I know another trade is going to come. I can guarantee you that there's plenty of opportunities out there. There's plenty of everything out there. I am not in a rush. I don't need this trade. This trade isn't going to make or break me. So I'd rather not have it break me emotionally. So for example, right now, USD JPY, we are currently bearish on the 4 hour. If we were to go down to the 1 hour, like I'm still interested in this trade, right? Let's do this. Let's build this trade out together. Let's do it again, right? So as of right now, we are bearish on the weekly. Are we? Yes, we are bearish on the weekly. The daily is bullish and the 4 hour is currently bearish. So the most ideal thing for this trade for you to do is not interested. I am personally still interested because we are literally just like a hair away from shifting bullish, which is just this point right here. So this is obviously something like a little more in depth that I like teach and like the full strategy, like how to wait for these pairs too. And I'm going to try my best to like add it in and stuff, but it's just like, it complicates more things, right? But to the point is, for example, right now, we won't have this, right? We won't have this. We'll have is, are we at a daily area of interest? Let's see, we just do the same thing, right? We do the same confluences. So daily EMA, we counted, I mean, daily area of interest, yes. Daily EMA, yes. Daily candlestick, daily rejection, yes. Rejection from previous structure points. Rejection from previous structure point, yes. Round psychological level, 135, 134, 500, yes. So everything here still remains. Actually, I think we add, right? So we have a daily, touching daily EMA, daily candlestick rejection, rejection from previous daily structure point, round psychological level. All right, so everything stays. So now we're gonna go down to the 4 hour, and we already know in the 4 hour what we gotta do. So we take all this off. We go down to the 4 hour, and the 4 hour, we only do these right here. So from the 4 hour, we look for the, are we touching the EMA? Currently, we are above it. So that does not count. Do we have a candlestick rejection? Yes, but we are technically bearish, so we can't be doing any of this stuff. Rejection from previous structure point, no, because we are bearish. So since we are bearish, none of it's going to check off. All we have to do is wait for it to shift bullish. Once it shifts bullish, what a coincidence that it'll then break the EMA. And then once it has the pullback higher low, we will be retesting previous structure point. You guys are seeing how by it breaking this point right here, all of that happens, right? You guys are seeing how simple that is. We just have this as the lower high, and I just have this as the lower low. So the moment we body close above, now the 4-hour will then be bullish. And then, bullish because it's bearish right now. It was bearish. So if it does that, it'll be bullish. And then once it does that, we wait for the pullback. And what a coincidence that this 4-hour lower high happens to also be the 1-hour lower high. So when I go to add for my entry signal confirmations, then I have the shift of the 1-hour, and then I will have the bullish engulfing. You guys are seeing how like it just pieces together once it breaks this structure point. So I should actually have this right now. So this is where I will. So it just lets me know once it breaks it, and that's where I'll be looking more at the trade. Does that make sense? Might have done it too fast. once you see the recording is there, bro, it was done fast, but it's crazy how I understand it. We would have done that the first day, I would have been lost. Yeah, I mean, obviously, because we've been, doing everything at a very slow pace in terms of like learning. At least how many confluence do you take a trade? Like 80%, 75%. So the minimum confluence that I feel comfortable with taking is anywhere from a 70% and up. You guys already know that's a C. C's are good to me. I passed high school with this, so it's perfect. So I don't see why I shouldn't take a trade around it. But ideally, you obviously want to get trades that are an A. Because if you don't have trades that are an A, you understand you risk more with that. So let's say this trade right here, right? So let's say this trade right here has a break above. So the 4-hour will then, we'll add it as 8. Right, rejection from daily structure point, candlestick daily rejection. We don't have this right now. So we'll have this as a retesting EMA. Let's just say that it breaks above and it retests the EMA. And then 8, we will put rejection from previous structure points. From previous structure point, 9, shift of structure. And then 10, entry signal, right? All of these 3 pending stuff are when we break above. So if we add these 3 pending stuff at the percentage that they are supposed to be graded, this is a 5%. This is a 10%. This is a 10%. So we add all of this up, and then we will have here this as bullish. So this would be a 20%. So if we add all of this up, this would be a 20, 30, 35, 45, 55, 60, 65, 75, 80, 90% trade. You guys are seeing that, right? Like, you guys are seeing how this strategy is so, like, I would almost say it's like perfection. Everything here is literally to the T. It is just, I don't know. To me, it's like craft to perfection. It's literally crazy. It's insane. So all we got to do is break this, retest it, and then pretty much these right here check off. Oh, shit. Not the whole thing. So once that breaks, then these will check off. Well, whatever. These right here will then check off. And once these check off, it gives us the better grade. You can take the trade now if you want, but if you take the trade now, you understand that you're only taking this because this is bearish. This is bearish, so you have only one time frame bullish to take the trade because you're going long. These other time frames are down. So this is down. And then this is down. So all you have to take this trade long is 10, 20, 25, 30, 40, 20, 25, 35, 45, 55. Bro, hold on. 20, 25, 35, 45, 60. Fuck, man, I'm tripping out. Right? 50. 50 or 60. Doesn't matter. It's an F. Like you're not doing great. You guys get what I mean. So 50%, 20, 25, 35, 45, 50. I'm telling you, I told you, David. I told you, Dom, it's 50%. All right. I'm gonna have to edit this part out of the recording. I'm fried, guys. Put you guys up in my shoes. I'm in a room talking to myself, basically, like through a screen, right? I'm just reading a Zoom chat. I could go a little crazy sometimes, right? So the point is that once you get the break of this point right here, look how drastically it changes. You go from a 50% to then a 90% by just waiting for the shift and then the retest. It's crazy. And all this requires is patience. And that is something that we're going to talk about in tomorrow's class in psychology. You're just seeing how everything is like boom, 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 boom. Like I'm trying to make it as perfect as I can for you guys. So yeah, so what do you guys think so far? What do you guys think? You guys get everything clear? Do you guys have any questions regarding today? You guys are seeing, before anything, you guys are seeing how I could have not possibly taught you pretty much the last two things without teaching you the whole entire thing. You guys are seeing that, right? Like everything is like perfectly calculated, perfectly step by step. So do you guys have any questions regarding this? Definitely need to see this shift structure. That's what I was missing for my entries. Yes, that is literally the secret right there. This right here, I'm just gonna say it. This is it. This right here, this is 90% of traders' mistake, not being patient. This is really what it comes down to, right? I've found out lately that problems come down to very simple solutions. So this is the 90% of what traders make the mistake on, and this is what 90% of traders, and this is what 90% of the traders think the solution is. They think the solution is the entry signal. And little do they know that the entry signal is the last thing in the trading strategy, that there is so much more that has to be done before you enter a trade. Everybody wants to know, where is my entry signal? What is the secret to enter? The secret to enter is you got to learn how to read the market before that. So that's probably the biggest take that I can send to you guys today. Bro, you're speaking like an 80-year-old man. How'd you learn this so young? I don't know, bro. That is a great question, man. I don't know. Nah, I really think it just comes down to like once you're in front of the computer for so long, like, you know, you're destined to get that information. Never seen it like this. Yeah, this is just the truth. And then this right here. And then this right here is just what 99% of traders don't even know what it is. Like, just truthfully, like 99% of they don't even know what the fuck any of this is or how to use it. So you guys now know. I invented the strategy. It was a mix. It was a mix of my invention / trial and error / YouTube and / logical reasoning behind taking trades. So it was like a mix of a lot of things. So I guess you can say I did, but I didn't invent any of these things. Like I didn't go to an EMA and put a custom setting. I didn't, like, all of this stuff. If you notice, it's just the market. Everything is just the market. So I didn't really, in terms of inventing it, no. In terms of creating it, like piecing it together, I guess, yeah. So yeah, that is today's